Unit 120, Introduction, Professional Asset Management.
Portfolio managers are professionals who accept money to invest in opportunities where growth is expected and there is profit potential, known as assets under management or AUM. PMs look for stocks, bonds, or private deals that match the goals of the investors. Compliance may require restrictions for only green energy companies or no investments in oil that needs a proxy for the strategy. Asset managers are compensated for their work under a traditional arrangement called 2 in 20, 2% fee for management plus 20% of profits realized. Large asset managers oversee trillions of dollars in customer money with teams that field local opportunities and understand local regulations. Firms like BlackRock and Vanguard are global organizations with more than $2 billion of AUM for customers like institutions, governments, and high net worth individuals. Those customers get packaged investment services, research, portfolio, and trading technology, and compliance solutions. Hedge funds that run 120 to 500 million of AUM are likely dependent on one or two visionary portfolio managers. A fund can be a family office that manages private wealth or a qualified group of investors that has a focus on an industry sector or activist interest. Funds can take on risk and be nimble as opportunities come up compared to an asset manager with a bureaucracy. Private equity, or PE, describes a group that takes large stakes in non-public companies like startups, growth firms, or buying an operating business. Money can come from high net worth individuals and institutions to fund a new idea or to take a business private without banks or a stock exchange. The main stages are seed or startup, where there's no product yet, venture capital, where a business is scaling fast, growth equity has an expandable business, and buyouts when total control and an overhaul is the goal. Portfolio managers use PE investments to get returns of 15% annually for customer portfolios with high-risk profiles. Activist investors buy large stakes in public companies to force changes they believe will help their goals. Activists get involved to change the direction of a company by various means. Beside changes to board members or a breakup, activists push for cost cuts, debt fixes, spin-offs, or greener policies.
Unit 120, Introduction, Professional Asset Management.